So, you probably saw the headlines. The stock market just shot up after the new India-US trade deal was announced. But, the headlines rarely tell the whole story. So why did the market react with so much excitement? Let's break down the real logic behind that rally.
The first thing everyone saw was this. The Nifty index surged by almost 2.8%. Now, any green day is a good day, right? But a jump this big, this fast? Well, it tells you that something more fundamental is going on here than just a little bit of optimism. It's a real shift in investor confidence.
And that brings us to the big question. We all know what happened. The market went up. But do we really understand why? Let's dig into the specific reasons that got investors so confident all of a sudden.
Okay, so first up, let's talk about that reaction itself. This surge wasn't just random luck. It was a direct response to something that investors crave more than pretty much anything else.
And here it is, the key. See, if there's one thing the market absolutely hates, it's uncertainty. For months, these trade tensions had created this huge cloud of doubt. This deal, it just blew that cloud away and gave investors what they were desperate for: clarity.
So, what was actually in the agreement that made such a difference? Let's get inside the deal and see exactly how things went from sky-high tariffs to a whole new set of terms.
At its heart, this is a bilateral trade agreement. And that's really just the official term for a deal that came out of months and months of tough negotiations. And the number one goal? To make it easier for goods to flow between India and the US by tackling the biggest roadblock of all, tariffs.
And the change was, well, it was dramatic. Before this deal, you had tariffs as high as 50% on some Indian goods. That's a huge barrier that made a lot of products way too expensive for the US market. Slashing those down to an average of about 18%, that is a game changer.
You can really see the scale of this right here. I mean, look at that drop. Going from a 50% wall all the way down to 18%, it just completely changes the math for Indian exporters.
Of course, it wasn't a one-way street. This was a deal after all. So, in return, India agreed to lower or get rid of its own tariffs on certain US imports, especially in key areas like energy, agriculture, and some industrial goods.
But here's where it gets really interesting. The impact of this deal goes way beyond just the India-US relationship. Let's look at what might be the hidden benefit here, how it gives India a brand new competitive edge on the world stage.
This quote just nails it. The most powerful part of this whole thing might not even be the direct tariff cut itself. It's how it repositions India compared to its biggest rivals in the region and around the globe. And this chart shows you exactly why. With its new tariff rate around 18%, Indian goods are suddenly cheaper to import into the US than goods from competitors like Vietnam and Bangladesh. And when you compare it to China, which is facing tariffs of 30% or even more, well, the advantage for India becomes crystal clear. So think about it from the perspective of a big American company. If you're looking to make your supply chain less dependent on China, India just became a much more stable, reliable, and frankly, a much more affordable option. Okay, so we've got the deal details, and we've got this new competitive edge. How did all of that turn into so much market confidence? Let's walk through the simple logic that fueled the rally. The market's thinking here was actually pretty straightforward, like a chain reaction. Step 1, tariffs come down. Step 2, that makes Indian goods cheaper and more competitive in the US. Step 3, that should lead to more sales and higher profits. Step 4, investors see this and get confident about future earnings. And finally, step 5, stock prices rally. Simple as that. Now, investors didn't just throw money at the entire market. They were smart about it. They really zeroed in on the specific sectors that were set to benefit the most. So you saw a huge rush of buying into companies in textiles, engineering goods, chemicals, basically anything in that export-focused manufacturing space. So, what does this all mean for an investor trying to figure out their next move? In our last section, let's contrast the short-term hype with the long-term reality.
Right now, in the short term, the feeling is fantastic. The market is already pricing in all of this expected growth. But the long-term story, that's all about execution. The benefits aren't automatic.
And for any long-term investor, this is the single most important takeaway. The deal creates an incredible opportunity, but it's not a guarantee of success. Now, the pressure is on Indian companies to actually take this advantage on paper and turn it into real sales and real profit growth. So, we're left with this one big, forward-looking question.
The stage is set, the opportunity is there, but will Indian companies actually seize this moment? Will they turn a great trade deal into a great business story? That's what the market is going to be watching very, very closely from here on out.